Hello traders, it's me again. I invite you to a live trading session, which will be partially transmitted on the YouTube. And after some time, we'll probably leave you and we'll be inviting you to our everyday sessions. We have 8 sessions per day in 2 rooms. We have a session in advanced room. We have sessions in beginners room. This session at the moment is in the beginners room, and I hope that your activity will be seen on the chat, because you have a chat where you can join us asking questions. This session is about my favorite strategy. It's price action and MACD. This is a strategy which I'm trading for many years, and I must say that the results I get on this strategy are really good. Later, I will show you an account which I'm at the moment showing it in let's say in public. This account is already 3 years old, and it gives me over 230% profit. But before we go to the profits, before we go to the charts, let me say a few words about this strategy. Okay, so it consists of 2 parts, of price action and MACD. Price action is something which could be called charts. Watch the charts and see what's going on, trying to solve the problem, or trying to find the answer where the price is gonna go. And MACD is an indicator which is somehow supporting us when we are making a trading decision. How it works, I'll show you in this beginning of the session. Later, we'll go to the charts, and on the charts, I will try to show you some samples how this strategy can be used. Price action is what is price action, by the way? It refers to the movement of an instrument on a chart in a specific period of time. As you know, we have different time frames starting from 1 minute up to weekly. And when we analyze a specific time frame, we look at the candles, at their shape, if they produce some kind of a pattern. Especially very helpful are inside and outside bars. Those are patterns which give us a lot of information what's happening actually on the market. Then we wait for the breakouts from those patterns, because in case of an inside bar, this is a typical consolidation pattern. Or if there's an outside bar, it's even better, because it shows us who is taking, who starts to rule the market. Yes, who is trying to move the market in his favor. So generally speaking, price action refers to movements on the charts. MACD is an indicator which is, let's say, independent, because it is dependent, of course, on price, but what it is showing is very straightforward. I mean that if you see that MACD is falling, it's falling. It usually signals that something is changing on the charts. And the MACD is a kind of a verificator. It's verifying our ideas. If I say, okay, I see a chance that market will go up, I check if MACD also, let's say, agrees with me. I will show it in few slides how it works. But before we go to MACD, a few words about why the patterns are working. The patterns on the charts are working because there are some emotions which are guiding people on the market. Emotions, we know them, we feel them, we also have them. It's greedy. We want to have more and more. We fear that something is gonna not work. We ignore signals given by the market because we are so focus on our trading ideas that we absolutely ignore everything around. And of course, we hope that the things will work. All those patterns, morning star, evening stars, they are recurring. They are being still repeated because the same emotions are ruling. Um, the patterns is because most of them give us no, uh, most of them don't give us too much information. What more, they make us a bit mm, confused because believe me, did you ever see 12 candles creating such a shape on the chart? I during my 15 years of trading that I would find something like this. So why should I learn those patterns or such patterns? No, I limit my the patterns I am watching mainly are those here. And even from those patterns here, the most important for me are the patterns which create such things like this. Those are outside bars and inside bars. And of course, morning, evening star is also a good pattern because it also gives us a hint that market is taken over by the bulls or by the bears. So just to make it easy, forget about all those patterns you saw a moment ago and focus on inside and outside bars. Uh, in my opinion, the best patterns ever we can find are outside bars. Outside bars are patterns which show us what is happening on the market. Outside bar is a pattern built of two candles. Okay, this is a smaller candle and a bigger candle, and the bigger candle must have its maximum and minimum over this first candle. Then we can call it an outside bar. So outside bar definitely is a mm, candle which is the outside candle is the one which is showing us who is gonna rule on the market. In case of inside bars, this is a bit more problematic because as long as price doesn't break out from the pattern, we still don't know who is stronger. But in case of outside bar, we know straight away who is stronger. And sellers us, let me show it like this. If you see market, okay, market is going up. And then comes a big black candle or red. It depends, of course, on what candles you use. And you see such a strong pull down. We have no doubts who is stronger. The sellers are stronger. And usually after this first bearish candle, there's time for more bearish candles. So observing patterns on candlestick patterns on the chart gives us a lot of information. The same happens with bullish candles. If we see market falling and then comes a big bullish candle, which is able to push the price from the very low higher than the day before, sometimes even higher than the 2 days or 3 days before. then we know that who's taking over the market. The bulls are taking over the market. This is a lot of information, helpful information for us, because this has impact on our trades. If I see such a situation, I will be no more a seller, I'll be on a buyer. And on the chart, it looks like this. Market likes to move in swings. We have a swing up, swing down, swing up, swing down, and so it goes. And in case of a swing up, a bullish swing, and we see that the bullish swing, on the top of the bullish swing, we see a bearish candle, it usually informs us that this is the end. This is the end of the upswing, and the downswing begins. Hello to our viewers on the chat. Hello, Nikitas. Hello, Nandom. As I mentioned, we are probably we are at the moment live on the YouTube, and after a few minutes we will be back here in our trading rooms. So those who are at the moment on the YouTube, you can always join us back in. If the transmission on YouTube is over, you can always join us back here in our education rooms. But still, we have a few minutes, so let me show you what I mean using the price action and MACD. Price action is the first thing I check. If I see a pattern like this, I expect a breakdown, because this is the signal that the sellers are stronger. And I keep my selling orders, my sell orders, my short position, so long as I don't see again that the market is taken over by the bulls. So as you see, of course, it doesn't happen every time, but there are sometimes such situations that we see that a downswing begins with a bearish pattern, and the end of the swing is a bullish pattern. Those are really strong signals. We can then open a nice position. After we see that bulls are taking over the market, we open a position. But not always will it happen. And to verify if this breakout will be followed by the market, I use the indicator which is called MACD. MACD is a very simple indicator. It's an old indicator. It was built, constructed, let's say, over 40 years ago. And it's what is it showing? It's showing us the difference between two moving averages. And the result we see here at the bottom. So the original MACD is not changing the colors, because the original MACD looks like this. Those bars here are non-stop the same color. I'm using a bit changed MACD, which is changing the colors. It's signaling me with the color that they're gonna start growing or start selling. I mean the MACD. And how I'm using it in trading? Very simple way. If I see, for an example, this is the indicator I'm using, this one on the bottom. When I see MACD turning around, I can suspect the market to do the same. And of course, not in each situation this happens, because sometimes we can see the market is really falling, but sometimes it's falling very slowly, or even this correction is very shallow. That's why we need to check what's happening on the price and then check the MACD. So when I see that on the price, we'll see a kind of a pattern like inside bar, outside bar. Then when the breakout comes, I'm checking if MACD is following. And of course, MACD is giving us a lot of information when there's a divergence. Divergences are very good signals, which are giving us a hint in which direction the market will go. Divergence is always when we see price making new highs, and those highs are higher and higher, and MACD in the same time is creating highs but lower highs. It means that when you connect the two maximums MACD, two maximums on price, you can see that they are showing different direction.